the first thing that I would like you to ask, give a little bit maybe exposure of your biography. I think a lot of our listeners and someone who never listened before, they know your fintech projects. And there is a really great newsletter that you're running. Personally, I learned a lot from it. So can you give us and help us a little bit exposing your experience, what you have been doing and what you think the greatest achievements in your experience?
So I've always, chased novelty and innovation in technology as applied to financial services. And so for me, I love financial systems and economic systems and sort of this like quantitative architecture of the world. But at the same time, the thing that draws me to it is kind of the act of creation or entrepreneurship. And so I started my career early on at Lehman Brothers in New York on Wall Street, and very quickly after that was liberated to be an entrepreneur. And in 2009, 2010, 2009, I founded one of the first Robo-Advisors in the US, in New York. At the time, company like Betterment had launched, Wealthfront had not yet launched. A Robo-Advisor is a digital investing Web 2 application, web or mobile app. And it was right after kind of Mint.com said, Mint.com delivered to people the ability to see their finances. And then there was a whole wave of companies that let people do things with their finances. And so you had Robo-Advisors for investing. In the UK, you had neobanks for banking. You've got companies like SoFi and Lending Club for digital lending, Robinhood for trading, and so on and so forth. I spent about 6 years building out what is now called AdvisorEngine. It's a wealthtech platform that was funded by WisdomTree and then acquired by Franklin Templeton. That was a lot of fun, but kind of one of my main takeaways was that a lot of fintech was trying to figure out how to sell traditional financial products in more digital ways. So if you're buying an asset allocation or an ETF, you were still buying it from the underlying custodian, even if it was dressed up not in a suit with a person, but in a website with pie chart visualization. It was a little bit frustrating because we thought fintech was going to change the world, but instead it repackaged the world for a while. And I moved out to London about 8 years ago and built out a equity research practice with a company called Autonomous, where we try to answer the bigger questions. So neobanks and robo-advisors, that's great, but like what are the big challenges to the large global banking platforms? And so I started looking at ICOs and blockchain, at artificial intelligence, AR, VR. This was kind of around 2017. And got really hooked on the blockchain world because ICOs did something that none of the digital investing apps or crowdfunding apps did before. And that is, it got regular people excited to put money into early stage projects. If you look at equity crowdfunding, outside of like 2 companies, it's largely been a failure, nothing burger. Whereas crypto and token investing has been generational. And so that drew me to ConsenSys. ConsenSys is the labs company behind Ethereum, the second largest crypto protocol, and then behind MetaMask, which is a crypto wallet with about 200, I don't want to make up numbers. When I left, it was around 50 million users. I think now it's around 100 or 200 million users. And at ConsenSys, I spent 4 years, everything from leading product management around DeFi to running the marketing team, the economics team. These days, I've got a venture fund called Generative Ventures. For the last 2 years, we've been investing at the intersection of AI, crypto, and fintech. So, for me, everything's a robo-advisor because everything's a robot with money in it. And so I've continued the thread that I have for the last 15 years.
Okay, it's pretty interesting analogy that started with the Robo-Advisor in 2008, the agentic AI, it's new leap, a new generation. I'm using natural language processing like models. I don't know, Gemini, ChatGPT, there are a lot of. And what they have in common, and what I feel as a customer, not as engineer, that they have a specific issue with the numbers and financial information. And how do you see this challenge from the perspective, your perspective? Because building algorithmic robo-advisor is that's one thing. But if you're building with the modeling and like educating on top of the data, it's kind of different approach. What do you think is going to be fixed soon? And if yes, which way?
the first wave of fintech, which is sort of applying Web 2 to financial services, most of the software was extremely deterministic and simple. Like a fifth grader would know the math. I don't want to give away all the secrets of UBS and Goldman Sachs, but a very smart fifth grader can give you an asset allocation. The math is not particularly complicated. And then largely what you're doing is hard coding workflows and integrating. At the time, there were not APIs of financial services firms, but these days integrating the APIs of financial services firms into kind of like large Excel sheet made of code. I think there was a more sort of material innovation with machine learning, which allowed you to do deterministic things, such as how do I underwrite this loan or underwrite this insurance policy or provide liquidity within these capital markets for this particular stock with these parameters, using machine learning and sort of these bounded AI problems, where you have a smart regression. It's a regression, but it's smarter because it's a deeper model. And then you have a lot more data, and then you do reinforcement learning and feed it on itself. And eventually, like, it's super tightly wound around, I don't know, like credit risks for people who live in Florida and are middle income. Like it's really good at predicting when they default on their credit cards. And then you make a different one for people who are taking out a mortgage, and you make a different one for people who've got car insurance and things like that. That's sort of the 2014 to 2019 era of AI in financial services, and it fit pretty well with these deterministic boxes, if this, then that sort of fintechs. Because what you do is you take that, you think of it like that's my engine, and I'll plug that engine into my machine, and then it will work. Generative AI boom is sort of a different quality. You're not trying to solve a problem anymore. You're kind of actually backing out of answers to problems into this like really squishy text predictor. If you want to visualize it, it's sort of like this octopus of intelligence that slurps around and is kind of liquidy, and it's not trying to solve any particular problems. It just averages out information about everything and then is able to give it to you in some particular form. And it's quite uncanny because it does perform very similar to a human brain, but less focused because it doesn't know what to focus in. It's just like literally goo of intelligence. And so people have been shoving that into different machines and seeing what it does. Even if you use ChatGPT, you know that if you give it a math question of any sort of substance, it doesn't do the math question using the LLM. It does it using a tool that it's provided, right? So if it's an octopus, then it gets its tentacle around a calculator, and then it pushes the buttons for you. And what it can do is take your instruction and then push the buttons. And then you can kind of raise that one level higher in complexity. So you can give it an API to integrate into through modern context protocol run by Anthropic. You can give it 1,000 APIs. You can give it 10 million APIs. And for the model, that's sort of all the same stuff, right? So it's able to use these tools. They're digitally native tools. And so it's taking your intent, inferring what you want, and then going and implementing it through these more deterministic pathways. The next set of companies that we're seeing are thinking about permissions a lot. So when it's taking the tool and is about to use it, it's got bounds and constraints. So when it's trying to do weird stuff, it stops doing it. And, in the context of like teaching a Tesla physical robot to live in the world, that's scary. And like, how can you enumerate all the constraints? In the context of like, you've got $100 in this wallet, ask me when you spend it, it's not that hard. It's a little bit more limited in the sense that you can force it to ask permissions and so on. So I'll pause there because I know that was quite a bit.
Actually, it's really, really cool answer and pretty detailed. And what I really like, you went through the like history and putting into the shelves with the proper sizing. From what I can hear, it's maybe that's an issue then with the name because it says AI agents, but for me it sounds more like AI orchestrators because okay, if I'm spending the money. So maybe then I can prepare some bills for you, or I don't know, invoices for your clients, or not just do the actions with the money, but then other stuff that we used to think that it's human driven, like, I don't know, financial team, which is reconciling and then invoicing clients, etc., etc. So is it maybe fair to say that the next level will be not this squishy octopus, which is like putting the tokens into the lists, but more an orchestrator which is able to take a specific tool and from kind of wishful thinking, kind of generated text, perform certain business actions?
I'll push the question back to you, which is that any different from a human worker? Like the people in organizations also have, if you're being reductive, like somebody's doing a job where they're doing their workflow, all they're doing is orchestrating this to that. And then occasionally you have sort of decision makers, so you've got a bunch of orchestrator people, and then you have a few decision makers who are like extra good at math or own the company or whatever it is. I think that's kind of the same path that the agent stuff is moving towards. So the reason you need agents, there's sort of like is different visions of the world. You can have like this blob super corporate brain that does everything at once and is magical. And, people are instantiating robot bodies, so they have an idea of a world model and they can like learn from the world and general intelligence. And then the other view of the world is like, actually the brain is specialized on lots of different bits. There's a great cortical column theory by the guy who invented the BlueBerry or the Nokia phone, I forget. But regardless, the Palm Pilot, I think. He ended up building out like a brain lab. And, his view of the brain is that there's lots of individual parts that are structured the same way, but are trained on different stuff. And so, if you have like an atomic architecture, you've got lots of specialized blobs inside of jars, basically, that are who have different jobs, and then you kind of hyperconnect them, and then you might have a manager on top that's telling them what to do. So you have, this is your marketing agent, and your marketing agent actually controls a video generation agent and a SEO agent that goes reads websites and figures out what people want, and maybe like a monetary agent that decides how much to spend on ads. And then the marketing agent orchestrates all that. And then marketing agent has a utility function to report to the CEO agent or whatever, And obviously at any of these points, you can inject people into the process to slow it down, to speed it up, to change the judgment. But, that's like organization design, and it's not as important, I think.
Okay. Actually, it brings the most favorable topic for me. It's Anthony Bandura and the agency theory, which is distinguishing, because in humanity, like usually you have kind of two types of people: someone who's doing the process and someone who's taking accountability. And he kind of wrapped it up into agent theory. So among humanity, we have a small percentage of people who actually they doing the agency. So they taking and solving kind of the stuff which is not known right now how to solve, and taking accountability for that. So if I will try to kind of sum up, for me, it sounds like we have two types of workers. Someone who's doing the process, like I gave you the instruction, I got the results back, like report. Give me the report, that's a report. And someone who is trying to solve an unknown problem, like we need to have 10 new clients in next month. Like no one knows how to do, but then the person can think, okay, we can use conferences, we can do direct marketing, we can do online marketing. And then the person is coming up with the ways how to solve the problem and taking accountability for solving this specific problem. Like that's my sales plan. I will do it. I will close it. So kind of for me sounds like something which is more process-like. That's potentially the slide to the AI agents or AI orchestrators, which will do the job. Like, do you need an editing of the podcast? Like drop the raw files, explain what you want, and in the end, you will have the video file. But if you want to kind of be an expert and go to the community, you need to hold an expertise which cannot be given to machines. So running the podcast maybe as a host and as an expert cannot be, I don't know, converted into the AI model which is doing does it sound right?
Who knows? I think I think there's no job AI can't do.
Okay.
I personally, it can be, it may be low quality yet, but I think on most human skills, we've shown that like the LLM architecture can approach human skill level. It doesn't generalize all the way, but it generalizes quite a bit, surprisingly. And people used to say AI can't be as emotional as human beings, and like it's obviously better at empathy than most people. Or people used to say that AI can't be creative than most people, and I don't know. I use a lot of AI for visual design, and I know the sort of like the music stuff and the video stuff, and like it can do at least illustration, and illustration is the majority of the creative arts. I think all the tasks you mentioned are sort of subject to automation, and I think that says not that like we're in danger and that AI is special, but rather that we are not special, and that intelligence is sort of a thing that lots of different types of things can actually exhibit, which is super exciting, right? To see that. I think we're entering a phase where there's going to be lots of orchestration, because there's still like a lot of deterministic ideas about, how to build a company and so on, and we know better, and so we'll arrange all these things. But I don't think there's anything special about the arranging skill set that we're going to hold on to.
Okay. And maybe for AI agents, it might sound a little bit like weird, but still the question from efficiency, because I was thinking about AI agents a lot. And one of the advantage of the human body, it's efficiency for the power consumptions and outputs. Like our brain is super efficient machine from like usage power perspective, because we, if I'm not mistaken, maybe it's a wrong number, but still we're using like 8 watts for power in the brain, and then we output in a lot like creativity, typing the stuff. And is it possible maybe to achieve the same energy efficiency? Because if we're doing the same things, then other comparison metrics will come. And is it possible in near future, because that's a level of the efficiency, like what we see LLMs are using a lot of energy, and to train, we need a lot of energy. And then to properly like use it, also a lot of energy. Do you see the next way where the humanity will be in comparison with the LLMs by optimizing LLMs? Or what do you think about power consumption? Because that's one of the limitation in AI agents.
I mean, there's a couple of interesting thoughts there. So the first one is, do you compare the individual human against an LLM, or do you compare all of humanity against the LLM? And I would say you compare humanity, because on average, the average person is no longer sort of like as skillful as an LLM. So that's sobering. Then the other thing is kind of just like the nature of software. So their intelligence is different than ours, and much better at some things and much worse at others. So like when we first got calculators, it's going to break the world, and calculators are better at math than me. And computers are better at sort of deterministic processing than most people, than all people. But nonetheless, there's ways that people think that are different from that are important. And even though we gave away like spreadsheets to Excel, we still have some value. I think that LLMs think also differently from us. To create one is a very high fixed cost, and then to replicate that is very little cost. Think about the time it takes to raise a human being, right?
That's true.
15 years for somebody to learn how to be a functional processing computer in wetware. Obviously, on software, there's much faster and cheaper. But you have this massive fixed cost. So it's like teaching all of humanity to learn in a new way, or like it's like paying for evolution. Like a step function in evolution is really expensive, and that's what we're seeing. I think there are a lot of investors as a result that have been focused on energy. And so there's a whole swath of people who are like invested in AI and LLMs. And then after that, invested in the chip companies. And then after that, invested in the components of the chip companies. And then after that, invested in like the nuclear power plants around which the data centers are built. So there's lots of smarter people than me thinking about it, but for sure it's an element.
Yeah, it's like a part of OpenAI investing into the fusion energy, not nuclear, which is working differently. And they made a possibility to do the commercial engine, which is actually generating the energy from the fusion, not like dividing the
Star
atom.
Trek is here, yeah.
Yeah.
You got the
So
core.
okay. If we trying to we talked a lot about AI agents, so we think and you think that there is a huge space and it's like not replacing, it's living together with a new tool as a calculator to help us to do the things that we tend to think only human can do. Okay, that's clear. And let's maybe jump a little bit on top of the financial infrastructure, like how it will affect the financial markets. Because my personal opinion that usually retail banks, they're not really good with innovations because they trying to hold the market, and doing all the sudden movements into AI or blockchain is scary for them at first step because it's something unknown. No one can prove you. And I don't know, big auditors, they cannot say, okay, if you move to the blockchain or AI agents next year, you will have this good numbers. So do you think who will drive the innovations in blockchain AI? So it sounds like a good sweet spot for doing the new things new way. Is it going to be the banks, or if it's not banks, neobanks or fintechs, like how this niche will develop?
Yeah, I mean, imagine if you come to a jazz artist and ask them to write electronic music or like some hardcore Norwegian metal, right? They're not going to do a great job. And I'm being kind calling the banks jazz musicians. It'll absolutely not be the banks. I mean, it's obvious. The banks are a feature within a technology landscape. If you open up your phone, the banks are an app in the phone. The banks don't have a phone and they never will. And they are takers of technology. The large tech companies haven't fully subsumed them, but they've definitely taken away their customer. So if I'm JP Morgan, yes, I'm worth almost $1 trillion, but I have to live inside of other people's ecosystems and put my store on the streets of other people's platforms. Even similar for Visa, right?
Yeah.
Like, how do you pay on the Visa network? You pay with a phone, you pay with proximity payments, all that stuff's changed it quite a bit. So even the best and biggest financial companies are features inside of a tech platform. They can capture value through regulators, they can maintain moat. If technology was fully unleashed, you would see what happens, which is what we've seen in crypto in the last 10 years, which is, 4 trillion, or I think it's about $4 trillion worth of value creation and the sort of reinvention of every single financial primitive in less time than it took for Visa to become mainstream between the banks. So I forget the timing exactly, but I think like MasterCard and Visa took 20 to 30 years to kind of get to their full scale. Mm-hmm. Maybe that's not true, but maybe decentralized finance really started in 2018, 19, and it's 2025, and every single thing that you could possibly want, from banking to payments to investments to asset management to insurance, has been sort of incorporated into a new system. So I think technology moves far, far faster than sort of like the human information transmission, which is the Banking Innovation Committee deciding to do a proof of concept on whether they're going to deploy into the cloud or a local server, which I'm sure is still being very hotly debated. So, AI innovation is obviously coming from the big tech firms and from Silicon Valley and China. Those are the two places that they're happening. Really, nobody else is leading on anything. Some people in Europe are doing very well on applied AI, building kind of consumer apps like Lovable. But the sort of core scientific breakthroughs is either California or China. The question about like, what's the financial infrastructure that comes out of this? So if there is an AI economy where a lot more GDP is coming from AI actors, from machines, and the machines are driving themselves a lot more, what is the appropriate financial substrate through which they pay each other and communicate? Are they going to be 9 to 5 and they're going to go to the bank window and ask for a check? Are they going to need a mobile app and nice little sort of blue buttons that look like glass spheres to make you feel good? Like, no. There is just, it's all machine money, right? It's going to have to be programmable. It's going to be 24/7, has to be extremely performant and fast. It has to be neutral, so if I'm a Google bot and you're an Apple bot and we want to transact, and I invested $200 million into Visa, and you invested $300 million into MasterCard. Which network do we prefer? With our venture fund, we went down this path trying to figure out what's the financial infrastructure underneath AI economies, and sort of the logic tree brought us back to blockchain. So if robots are the heart of future GDP, then crypto is robot money, and that sort of fits together. Whether or not it'll prove out, I don't know. And whether or not crypto as it is will be that, I'm not sure, but I think it's our best bet. You see companies like Stripe and Coinbase leaning very hard into this.
Yeah.
And Coinbase is an exchange. It's for trading Bitcoin against the dollar. But they have a Coinbase Pay project that they've run, I think, unprofitably for a long time. That is now integrating USDC, which is the stablecoin they get paid from, on a protocol they control called Base. And then there's a whole SDK for AI agent payments, for a robot to be able to have a wallet, initiate payments, and so on. Similarly, Stripe is in the same position. Stripe is a payments company, so coming from a different vantage point, but they want to run the finance system for the internet. And the internet is now changed. And so they've spent $1 billion on Bridge, which is a stablecoin company, another couple $100 million, I think, on other stuff that's related to it. They've just announced their own chain called Tempo, going to be an Ethereum-based EVM chain. They've got an SDK for agentic payments, and the advantage they have is that they sit underneath OpenAI and Anthropic already. So doing Web 2 sort of payment processing for subscriptions. Not as exciting as robots doing stuff, but it's there. So I think between those two companies, that's where we're seeing the incumbents come into play. And then there's a long tail of people trying other stuff. We made investments in a couple, like Nevermind, which is an AI agent payment processor, but that's roughly the landscape.
Okay. It outlines quite a lot of like a perspective. And usually I have this question like in my head, because if you go into the classical financial systems, like usually you have the currencies which are baked against the labor of the specific country. And the question that I have, it's not a tech one, it's more financial. Like, okay, we have, I don't know, let's take some European country like Sweden. They have own currency. The exchange rate is baked by the labor which is produced through the year by this country. And then it's protected by military, etc., etc. If we're switching into the world of cryptocurrencies, there is no government, like there is a corporate world, which is kind of maintaining this exchange rate. Do you think it will influence a lot, like how we're dealing with the money? Because we tend to think that as a European Union person, you're going to a European bank and you're opening the bank in Euro accounts. If you would like to have in USD, it's kind of hard because the local bank might not give it to you. Do you think it will change how we're dealing with the money if we're switching to this agentic AI and blockchain? And the second one, that countries will not have this economic power because instead of holding the local people like labor, or I'm sitting in, I don't know, Sweden, I'm using USDC, actually I will be baking the United States economy. Will it change how we work with the financial instruments? Is it affecting it?
One net effect of globalization and a global internet, like if we go to the world that is completely open and permissionless, which we definitely are not where we are, right? Like we thought we would have an open internet, but instead we have TikTok and Facebook or YouTube, right? People actually don't consume the open internet. Like think about how much time you spend on a website, which is open, versus on a closed platform, like Netflix. Or if you live in China, you're definitely not, consuming YouTube. But if you the sort of like the natural outcome of the completely open internet and then open financial internet is a winner take all currency, and that is there's Bitcoin and there's the US dollar.
Mm-hmm.
That's it. If you look at Web3 today, which in retrospect is very small compared to any global power, it still needs to 10x and then 10x again, and at that point it's the incumbent. Web3 is entirely dollar denominated. Yes, it's denominated in ETH on Ethereum and, in local tokens in different places, but like people use it for dollars, and people not in the US, but in Latin America, in Africa, in the Nigeria-China corridor, in Asia, and in the Philippines, they're holding dollars. That's what it's for. And there's been a couple of initiatives to try to get the pound or the euro on it. But, nobody wants it because it's not a good currency. It's just
or even Chinese yuan.
Or yuan. Yeah, for sure. Nobody wants the currency. It's just not the best. And that's what happens actually in all of the internet stuff. It's winner take all for everything, So the very best, I'm dating myself here horribly with my reference, but like the very best Justin Bieber, there's only one.
Okay.
Like number 2 Justin Bieber does not matter. And number 50 definitely doesn't matter, right? Whereas if you go to the Middle Ages, every town has the one guy who's really good at like banjo or whatever, right? So every musician can be local and do performances. In today's world, no. There's massive winner-take-all outcomes. And that's true for currencies. That's true for technology. That's true for venture capital. That's true for talent, all of it. So it doesn't mean you should give up, but like just that's the direction of things, the direction of travel. What we're seeing in the stablecoin world is it is the dollar, but there's lots of ways to get there. So every corporation wants its own version of the dollar. And it's the same dollar, it just has a different label on it. So Apple dollar, Google dollar, Ethereum dollar, Solana dollar, Ethereum dollar 2, 3, 4, 5, and so on, right? So think about a brokerage account. Every brokerage account has a cash sweep. The cash sweep is usually a money market fund made by that broker. Schwab, Fidelity, their venues, they control a walled garden. And then when you're in their walled garden, you can have other people's dollars, but please take my own. And these are big vehicles, right? It's 800 billion AUM, I think. I don't remember exactly, but I think that's roughly the order of magnitude for the cash sweep. So anybody who's got distribution or a market venue will print their own dollar. And then who does that help? Obviously, the US Treasury, which is going to distribute its debt to everybody. Lots of people that don't like it. The Chinese won't like that. Unfortunately, Europe has lost its right to complain by doing absolutely nothing for the last 5 to 10 years.
Or even blocking the AI and putting more legislation and...
Yes, aggressively undermining itself. And that's true for the UK as well. I mean, it's been an enormous fumble for both the UK and Europe. So yeah, I think you do have sort of the dollar standard grow as a result. I think people thought it would be Bitcoin, the world reserve currency, but it's not yet clear.
So it's basically the hybrid model, and I usually use the analogy like with the Bitcoin, like Gopher and internet, because if you had an experience with the first internet before World Wide Web, it was Gopher, the first protocol with the links, with the ability to move from one website to another one, but it's dead. Like it was the first iteration, which didn't catch everything right. And for me, we're kind of living in this almost Gopher world with the Bitcoins when we're trying to figure out how it functions as we want, but not there. And it seems that stablecoin, this hybrid model, which is allowing not just a hype currency to exist, but be the currency which is baked by someone else's economy and have some more predictable value.
Yeah, I mean, Bitcoin as a investment asset is a much better investment asset than a stablecoin. Oh no, there's like volatility in Bitcoin. Yeah, it happens to be 10,000 times and like up, right? For how long, who knows? But it's been a great investment asset. So Bitcoin, without any question, is a better thing to hold if you don't want to lose purchasing power to date in the last, since 2009. However, it's like hard to understand and it's complicated. So digital dollar is easy to understand. I mean, in fintech, if you bring it kind of back, there's lots of complicated fintech products that are really good products that nobody buys. And there's lots of really simple, not so good fintech products that are fun and easy to understand that everybody's in, so like, not to throw shade, but do you think the average Robinhood user makes money? Does the average Coinbase trader, the average Binance perp trader make money? No, but it's fun and it's there and you press the button and it makes faces, Whereas like one of my favorite products was like BlackRock used to have this series of scientific funds. And what they would do is it would be an index fund, like the S&P 500. But then it would decompose it by factors. So growth, momentum, value, quality, and there's like 5 statistically significant ones. And then it would change the weighting of the index to tilt it towards the factors that are statistically significant for like overperformance over 20 years. And it was like just a great product. I was in love with it. Like, I sat through hours of presentations about this product and I was like, oh my God, they figured it out. Like it's just like mathematically a better product. And they had to kill it because nobody understands any of it. Whereas, buy the market, press this button, people do it. So I think that's why the stablecoin digital dollar stuff is winning. I think again, relative to fintech, stablecoins do is replace embedded finance. So we spent sort of the mid 2010s talking about open banking and PSD2 and integrating APIs from banks and reconciling ledgers. And I think quite a few number of people have been taught a lesson by the Synapse collapse and the fact that, trying to build a database that syncs to Evolve Bank and Trust, which was $1 billion AUM bank or deposit bank, a tiny bank by US standards, relying on like 5 guys and a Jack Henry integration. It's resulted in 30 or 40 million like lost in the wind, and the destruction of Synapse and downstream like Mercury getting challenged and Evolve is getting challenged and everyone's in bankruptcy court and suing each other and pointing fingers. And like it is the simplest problem to solve and it's called blockchain, and it was done in 2009. You now see a number of fintechs with distribution building on stablecoins as a much easier way to get access to. They don't want a bank, they want the US dollar. They want money. They don't care if it's a deposit account or a money market fund and so on. Not surprisingly, a lot of the community banks and the regulators or the folks who have like a vested interest in the banking system are going to be very uncomfortable because it is a strictly better product. So we'll see how that plays out.
Yeah. Actually, it aligns a lot, and we see this competition between like regular banking infrastructure, APIs, open banking, open finance. I don't know, the recent legislation in Emirates, which is allowing to do open finance through the next like a step as open banking, but still not so much progress even on the legislation side with the stable coins, because like the banks are not pushed to have the stable coins in their infrastructure, et cetera, et cetera. But it's good analogy or perception that the stablecoin is new open finance.
It's literally the substitute.
Yeah.
I mean, think about what a substitute good is.
Yeah.
It's a cheaper, more reliable, more consistent, more trustworthy version of open banking.
I would say for me, the key element is that if you're using stablecoin, you're no longer rely on the bank or application itself. So
you've removed counterparty risk.
Yeah. So basically, you can download any application which is supporting this network, log into your wallet, and operate without having this intermediary between you and the network.
Yeah, I mean, people it's very frustrating for me because I sort of went from fintech to crypto 2017 because I'm chaser of the frontier. That's what's interesting for me. And it was, I think, pretty clear then, and it's pretty clear now, 8 years later, where people are saying, oh, like, we don't need to have a ledger because that comes for free with Ethereum or other sort of related blockchains. Oh, we've just like what you said, we don't have to have a counterparty with the bank that signs the agreements and then, refuses to show up to integrate because this person's on vacation. And so, we can't do it until they're back in 3 months. No, you don't have any counterparty risk.
Yeah, change the rails.
And this is what blockchain's been about for a really long time, when people have been saying it's permissionless and, you're removing intermediaries and you're avoiding 2008, which is literally, I started my career at Lehman, counterparty risk, right? Some of these things, I think we're just kind of relearning the lessons and the motivations for why they make sense.
I got it. And I think it's pretty insightful discussion. I would like to jump into the last section of our podcast. It's a book recommendation. And I know that you brought something that you usually recommend. So what is it?
Yeah, so for anyone who's listened to me before, you probably have heard this, but I think the best book to understand kind of where we are and then the near future and maybe where we're going is a book called Accelerando. It was published by Charles Stross in, I think, 2006, 2007. it plots things by decade into and through the singularity. So, it's kind of, people tease you if you say singularity these days, but it's we're getting there, which is the convergence of these financial themes with AI, and then with blockchain, and with AR, VR, and spatial computing, and the robots. Like it's coming. And so this book plots it by decade and kind of takes you through the logic tree of the near future. It gets really insane at the end. You end up with a Dyson sphere around the sun with like the AIs living in it and running
But that
their own
solves
stuff.
the issue with the energy with the Dyson sphere.
Yeah. You got to build the Dyson sphere. It's the only way. And then, humanity is on like a spaceship light sail to like the next. But the more interesting parts to me were kind of like when it goes through the 2020s, 2030s, 2040s, before things get really crazy. And Stross in the early 2000s, he saw these brain models. He predicted them. He predicted decentralized autonomous organizations. He predicted the evolution of capitalism and into a different sort of economic system in which humans will have trouble participating unless they also become cybernetic or evolve in some way. And he really put it together. So I'd strongly recommend it.
Okay, it's really great one. Thank you for sharing with our listeners. And today my book will be from Hugh Howey, which is Silo. It's also a little bit like a fictional book about the future. It's not so bright maybe as compared to yours, but it's really good sci-fi, and it gives kind of the taste what the afterworld might look like. And it's pretty interesting in terms of the taking the leadership as a heroes there, and the structure, how actually it affects our communication as humanity, because people locked in this silo and how they obeying the orders and etc. is really interesting. So it's not a financial, but still good to tease yourself with the fiction and see how it might be different. And I would like to thank you for this episode. It was really insightful. I know that for you, it's well-known topics because you're doing a lot of job with understanding and predicting the future. And thank you for sharing with our listeners. It was really good.